Right, I'm afraid I don't have time to do a major comprehensive analysis on the indexes, written that is, so I'll just make a video. I'll try to make it as short as possible. Inside day, signal days. So currently we have an uptrend. Bullish on the monthly chart. We have a fake out low on the weekly chart and breakout on the daily chart. We have a scenario where yesterday closed as an inside day, using my new indicator that I made yesterday. Don't need that anymore. This has replaced that one. So the Stacy Burke signal day light version, because I intend to do more with it. Anyway, so inside day scenarios are that we break out the high and stay out. That's one scenario. Or we come back inside, and if we get accepted aggressively inside the value area high, the New York highs, the London highs, below the closing price, for instance, then there's a likelihood that we continue through the range to the other side of the value area, if not all the way back down to the other side of the range of the entire day. Or we just stay sideways. So markets do one of three things. They break out and they can just range. They break out, pull back and continue, or they break out, pull back and fail. Okay, so that's scenario. Those are two scenarios for the US 500. And I would trade the opening range, which is about to show up on our chart any minute at 10 a.m. Yesterday, the opening range was over here, as you can see, and you could have traded the breakout long, you could have traded the breakout short, whichever way. Neither was particularly fruitful because presumably we didn't have much direction in the market. Now, if the US 500 were to, let's have a look, break below yesterday's highs, we will have a fake out high of London, accompanied with 3L, 3 sessions of rise, accompanied with the first red week, accompanied with a very toppy market on the monthly chart, and a fake out high on the daily chart. And that will be a strong signal to be trading the Wall Street opening range breakout. Well, let's just wait for the indicator to turn up. Should do now. There you go. Now, don't forget, we've got major red news that's just been released, so want to let the dust settle, see if there's any volatility. But let's just see if I can prove a point by holding on to this as we wait for the data to do its thing. Maybe it's going to come down and take out yesterday's highs. At the moment, you can see here, DBO, daily breakout. That means the market's above yesterday's highs, broken out. If it gets below yesterday's highs, it will say fake out high, just like it does down here on the 8-hour chart. There's the London highs. We took the high in the Wall Street Open and we faked out 8 FOH. We'll have the same thing say here, FOH. And that will give us a signal. The Trend Predator Pro will give us a context downtrend, reversal high of day, fake out high type, quality, potentially definitely a 2-star, maybe 3-star, to trade in line with the trend. And we can trade the breakout of the opening range. Don't forget, we got the closing price as a potential obstacle. Not always, but it can be an obstacle. But this essentially will be a death line trade setup something that I have in my trade, in my playbook. I'll see if I can just quickly bring that across to the screen. Yes, I can. Bear with me. It's going to open up shortly. There it is there. The death line setup. Asia. What's going on there? So Asia, London, New York, previous day high. Okay, let's have a look how that compares. Asia, New York, previous day high. And then looking for the sell-off below the previous day high. Looking for the sell-off below the previous day high. Accompanied with a inside day signal day makes that a pretty powerful setup. And I will pause this video to see if we get a signal by breaking the inside day highs, just to illustrate how this indicator works for you all. One moment. Let's pause the video. Right, there we have it. 2-star setup. Fake out high. There's the chart showing fake out high on the daily, breaking down below the inside day highs. This gives us a setup to go short. Now, the way that I would like to work this is on a 5-minute chart potentially. Again, we've got major red news that's come out. I haven't even looked at the result. I'm not concerned. I'm looking at the price action. This is a textbook fake out high, wicks at the high of the day. This is potentially going to be a 5-minute breakdown candle below the orb. This could be taken as a short in the next 5 seconds. If it's broken out of that box, we have the price below the 20 EMA, the VWAPs from Asia, the blue line, London, the yellow line. We have the green line as well, probably should be there. Don't know why it's not. One moment. Anyway, that was an entry, by the way. Stop above wherever you want to put that, maybe above the 20 EMA, for instance, maybe just above the daily fake out high, targeting a 100% range expansion and a potential sell-off in the making, in line with the inside day trade setup for a short. If you're ambitious, a 200% range expansion. If you're really ambitious, all the way to the previous week's low, the previous day low, the inside day low. That's a massive R. In that case, you might want to be a bit more conservative. You stop if you're trying to be that ambitious, because you have the leeway to do so. What I was looking for, I was looking for the where's the VWAPs? I don't know why I'm not seeing. I might be blind. No, I am blind. I'm being blind. There is the Wall Street VWAP, the green line. So that is all looking rather bearish. Now, having said that, we have major red news. Major red news can be whipsaw price action either way. Okay, so caution around major red news. I also said be careful of the closing price. It can act as a support. So how to play that? Well, you might want to wait a bit more time. No need to get in just because the market's broken down and you don't want to miss out on the trade opportunity. Wait until 10:15. Let the market play out. Let the market trap traders short and long. Let it build up, and let's see if we can't get a fake out high. Fake out high in the 5-minute, a fake out high in the 15-minute, and trade at 10:15 or maybe at 10:30. I mean, this market might not go anywhere. We don't know. It's roll the dice, but this is a setup. It is a inside day setup, 3 sessions of rise, 2-star quality, fake out high on the London session, fake out high on the inside day, breakdown of the opening range, Wall Street, coil that we're moving out of from up high. And I'm going to now glance at the data if I can find that. How did it even come out? Tracking this across. Here's the FX Street calendar. Very comprehensive calendar. Slightly bullish for the US dollar, potentially. Versus mixed data from earlier on. Not much to go on here. There's nothing extraordinary out of this data. Although, what I would say is that the jobs data of late has been bearish for the dollar, whereas the industry data has been bullish. So that is a counter argument to rate cuts. So therefore, that could be dollar strength. And potentially bearish for the indexes, in fact. So anyway, so now we're starting to get some bearish momentum as we move through this timing cycle of the 15-minute candle. We got a 15-minute close below the opening range box. 15-minute close. Wicks up top. Pump and dump scenario. It's all looking, for now, rather bearish. Sorry, we didn't get a 15-minute close. We're in the current 15-minute. I do apologize. We're in the 15-minute candle. So if we get a 15-minute close outside of the box, then that's quite significant, isn't it? Especially if we get below the closing price. Okay. And I think that will do for now in terms of a bit of education around how to play this. So let's look at the US 30 while we're waiting for this 15-minute candle to close and see how the price behaves at the closing price. The US 30, what have we got? US 30 also was an inside day. As you can see, we've got a 1-star quality setup to be looking for a short. It's not, let's have a look. The indexes we have, yeah, so the US 500 is slightly weaker than the US 30, so I'd rather trade weakness, sell weakness than sell strength. The US 500 for me is set up better. It's a higher quality setup. Looking at the US 100, we have a day zero template. The day zero template is essentially one where we can look for a breakout to the upside. This is our range of the day zero. We can toggle the indicator to give us a better insight into that day zero by separating the days. We don't need to draw that box there. So fake out low, fake out high. Peak formation low, peak formation high. Above last week's lows. This is a potential bullish setup if the bulls take the baton outside of yesterday's highs. Peak formation high, if we break above it, then that's bullish. If we stay below the peak formation high, then we assume that those bears remain in control. But then, of course, we got the previous week's low as an obstacle. But below there, well, in fact, below the London lows, we have a bearish setup. but I'd be uber bearish if we can get below last week's lows, especially the lows from yesterday, the fake out peak formation high lows, for a downside continuation into the lows of the day zero signal day. Okay, so I'm going to leave that there. For us, that's my analysis on the indexes. As you can see, look, we've got let's get rid of all these drawings now. It's just a mess. This closing price acting as support. Okay, this is why I want the data. After data, we wait, we are patient, and we wait for the market to set up. We don't trade the numbers, we wait for the market to set up. Otherwise, you can get trapped. So I'm still bearish on this, and I'm looking for a fake out high and a break through that closing price to take it short. That's my current preference. Obviously, this can all turn around, and this could turn bullish. Who knows? But at the moment, it's bearish.